Good evening, everybody. My name is Randy Melzi, and I'm a senior director here at the America Society Council of the Americas. I would like to welcome you all to this public panel on Mexico's political and economic outlook. The event is part of our Mexico series, which is sponsored by MetLife. And everybody who's watching us on webcast, thank you for participating. Telefónica is a sponsor of all of our webcasts. If we have time this evening, we will also be taking questions from Twitter, and one of our colleagues is in Mexico City watching the program and tweeting. Last week at Davos, President Peña Nieto was the center of attention because of Mexico's ambitious reform agenda. Testimony to this is the fact that billions of dollars of foreign direct investment were announced last week during the conference. But the optimism about the reforms in Mexico may be tempered by pessimism about emerging market currency and equity markets. I would like to thank our distinguished panelists for joining us this evening in the midst of these turbulent markets. And with that, I turn this over to Jose Enrique Arrioja, the moderator this evening, who will introduce the panelists. And before I do that, I want everybody to please turn your cell phones off. Thank you so much for joining us.
Thank you so much, Randy, and good evening to all. It's a great honor to be here, and for me, I have to say, it's like hosting Saturday Night Live. It's a big honor because I usually come as a journalist and sit among you guys watching what the people say here. And tonight I have the incredible honor, thanks again to Randy and Susan and Andres Sada here at the council, to be asking questions. What a wonderful thing, isn't it? Huh? And asking questions to an incredible panel that I'm very happy to introduce shortly, talking about the political and economic outlook of Latin America's second biggest economy, Mexico. And it's an intriguing moment to be asking questions because bullets are flying. And as Randy was mentioning, we're seeing a rout in the emerging markets across the board, and that is something that Gerardo, I'm sure, will share with us shortly. And it's an incredible moment to ask very dynamic question about what the future will hold for a country such as Mexico. Having said that, we have Lisa Schineller here next to me, who is an economist and managing director for the Latin American Sovereign Ratings Department at the Standard & Poor's, being responsible for the analysis and forecast for countries such as Brazil, Mexico, and other distinguished nations in Latin America. Lisa knows the region like very few in New York. Gerardo Rodriguez, who is hard to find a voice outside Mexico that knows best what's going on in the country and the complexity of the Mexican market and the public finances, as Gerardo, after being undersecretary at the finance ministry for 14 years, working there, and now being managing director of Blackrock Emerging Market Group here in New York. Gerardo, honored to have you here as well. And last but not least, we have a professor who is coming from the Cornell University, Gustavo Flores-Macias, who was born in the south part of Mexico City, near, for all that you know, Mexico, near Xochimilco, and that has been, teaching in the U.S. for quite some time, who is a PhD in comparative government from Georgetown University, and he's also an author of a book, After Liberalism, the Left and the Economic Reforms in Latin America. Thank you all three for being today here with us. And my task is to try to keep you guys engaged in this conversation throughout the end of this panel until 8 o'clock. Probably we can have some tequilas and some wines after that. But before we get to that point, that will be my task to ask, again, this incredible privilege to ask questions. Lisa, let me start with you. Back in December, just a little bit more than a month ago, Standard & Poor's upgrade the sovereign rating on Mexico. And in that statement that usually comes with the announcement, you said something that I found very compelling. Mexico is having a watershed moment. And you were referring to the approval of the energy reform and the other reforms that we saw last year being passed in Mexico. You essentially upgrade the country to a BBB plus rating, the same rating that Mexico got back in October of 2007. We're now rating vis-a-vis on the same slot. Still, I'm sensing that reading the statements of those 2 years, you are a little bit more positive, or Standard & Poor's as a whole is a little bit more positive on the Mexico momentum that as we know it right now. Is that true?
We upgraded in December, following a whole series of reforms last year, really culminating what we would consider a landmark energy reform that has yet to be, there's still a lot of space for and crucial implementation moving forward in the next several years, including getting secondary legislation through the first half of this year. But from what we saw from the contour of the reform that was presented, really something you hadn't seen in recent years. You put that together with some of the other measures, including some signaling on the fiscal policy side, and we felt that moving forward, key areas for us in terms of vulnerability in the fiscal accounts, because of the oil base dependency, that this was different. Medium-term growth prospects could also be higher than we'd seen. Estimating this very difficult, but of all the reforms that were put on the table, this could be the most transformative, we believe, in having a bigger bang for your buck, more quantifiable sooner at some point. Again, I think important point to highlight, we don't see it immediate. And I think that's we can come back to that, I'm sure, in our discussions. But really what you saw on the table was a real advance from our point of view. And
there was the second credit rating upgrade for Mexico, in December from you, and in May previously from Fitch Ratings, correct?
Yes, I think they did. I think they moved earlier in the year. We put a positive outlook on quite early in the year when we saw momentum, and from our opinion, moving that you could have substantive reforms actually presented and approved, which has been somewhat elusive because of the challenging nature of fiscal and energy issues politically in Mexico.
Gerardo, on Friday, the CEO of one rival company, quote unquote, the CEO of Goldman Sachs, Lloyd Blankfein, was interviewed on CNBC in Davos, and he said, pretty much quote unquote, that it feels like Mexico is a different place, is an energized place nowadays. Are you surprised by the progress being made so far in the past 12 months by this nascent administration?
So Mexico learned its lessons the hard way after different periods of recurrent financial crisis. That opened up a space of consensus, which there have been just a few over the recent history in the country around financial stability, macroeconomic stability, fiscal discipline, monetary discipline as well. That has been driving what's Mexico right now and what it has been over the past 10 years or so, in which you have significant development on the financial side, but not enough economic growth. It is being overdiagnosed, the challenges in terms of unlocking more investment opportunities, and with that enhance GDP growth potential, and sort of the fiscal issue can be addressed as economic growth sort of picks up. But the political arrangement of the country, we have a democracy, we're very proud of that. It cost a lot of years to construct. Everyone is well represented, but when you look back, it is not being very productive. So this ability of constructing a vehicle, a tool, to process the reform actually has been much more positive than what people were expecting a year or a year and a half ago, and that's what has been created all this positive environment around the Mexico possibilities.
Gustavo, if I ask you, we have heard, so many times how, the Pacto por Mexico, this political agreement between the different political forces in Mexico has helped and have created the sufficient, material and energy to push this reform forward, during the previous 12 months. Can you remember, or can you share with us any other political moment in the recent history in Mexico where something like this has happened before? Can you put that into perspective for us?
Sure. Thank you for the invitation first to be here. I appreciate it. I think we can study this at two levels at least. The first one having to do with the political forces coming together to make these reforms happen. And I am not sure there is a precedent in Mexico's recent history at this level. And we have a transition from an authoritarian regime to a democracy not too long ago. And within the period of democratic life in Mexico, I think this is unprecedented. Now, we can think of other periods, that's at the political level, at the economic level or financial level in terms of the magnitude of the reforms. The current juncture reminds me of sort of the stakes of the reforms back when the North American Free Trade Agreement was signed, in the sense that it was a key moment in the country's history. And the country had really different paths, of course, but the reforms were made that opened up these paths, and the country faced this opportunity to continue along the same path. In this case, today's path would be sort of the status quo, growth at about 2%, maybe 2.6% per year on average, with financial stability, but nothing exciting happening, nothing too exciting happening. And then the other path, which is really unleashing growth, sustained growth, and really giving the country the at least 4 or 5% GDP growth rates that it requires to keep up with countries that used to be about the same level back in 1985, so not too long ago, 30 years ago. We look at places like Poland, South Korea, even Brazil. And when we see their trajectories, and we compare GDP per capita today with that of Mexico, and those countries have gotten ahead. So this I think is a key opportunity, the way that NAFTA presented sort of this critical juncture in the country's history. And at the political level, I do not think it has precedent in recent time.
Thank you for that. So if we move forward from where we are now to where we're going to, Lisa, let me ask you this. Mexico is coming from the slowest growth expansion, last year, probably 1.3%. This is the slowest since 2009. And service and domestic consumption has been affected for that, etc. Will this current situation make things a little bit more difficult to reaccelerate in this 2014? What is your call, knowing what we know nowadays?
Yeah. Our expectations are for growth to pick up this year. More related to the fall, you had some aspects last year, temporary aspects, in terms of the government coming to office, slow executing on its infrastructure program, budgetary, just and basic budgetary spending. So that's something that was a drag on growth last year that we don't see it being a drag on growth this year, and you actually have some more fiscal stimulus in the pipeline for this year. The slowdown in the U.S., we see lift coming from the U.S. this year, as you sort of see some of the numbers in the second half of last year, different importantly from the beginning of last year. And the outlook for the U.S. looks stronger. The tapering volatility introduces different pressures on rates, currencies, and I'm sure Gerardo can go into that. But again, the fact that the tapering is happening is a positive in the sense of it's reflecting what we will believe is the stronger U.S. economy. And that is key for Mexico. So you have those elements coming into play this year, where we see growth picking up to around 3%. We don't have growth booming because of the reform dynamics, because we believe that, for example, on the energy side, it's going to take time for this to be put into place. One, you're talking about the detailing and the passage of the secondary legislation, but then you've got to implement it, and that includes the PEMEX zero round, strengthening the institutions at Schineller, CNH, et cetera, to then move forward in terms of the whole subsequent bidding, et cetera. So as we see a slower phase-in, I think, than others did initially, probably closer to what was reiterated by the government earlier this year. But that's not why we upgraded. We didn't upgrade because we're seeing growth of 3% this year versus close to 1% last year. It's a structural medium-term perspective story feeding into the fiscal accounts, growth dynamics moving forward. So we see pickup this year, but the reform extra is not necessarily going to flow this year.
And how much do you see, from the fiscal reform, for example, the banking reform being put in place in motion this year? Do you see some additional pickup due to this too?
We're not really doing that fine-tune estimating. I mean, I think in the sense that we've seen the estimates from the government. It said you have attempts here and there, but by the way, these haven't been fully financial. It hasn't been fully put in regulatory, et cetera. We see more of the lift coming from kind of cyclical factors this year, and then growth moving towards the 4% range several years out, more reflecting the combination of reform efforts.
Gerardo, no pressure on you, but we need to talk about the peso. It's okay? It's okay with you? The emerging markets are having a really nasty January. The exchange rates worldwide has been recording some really heavy losses, etc. People are pretty much, living in a stampede in the past 2 weeks. What is your assessment of this? Is the fears of Fed tapering, as Lisa is also mentioning here, is the fear of China? Is the fear that Argentina devaluating last week? All of the above. What is your call?
So we've had at least a couple of years in which risky assets have performed extremely well, both credit and equities. And the taper discussion back in May caught many people off guard. And that was very, very bad for the asset class of emerging markets as a whole. Not just because it exposed some of the vulnerabilities of certain countries, but just because many people have gone into the asset class without thinking well what that implies. And actually investing in emerging markets is subjecting yourself to this type of idiosyncratic risk that we're seeing right now: Thailand, Turkey, Ukraine, Venezuela, Argentina. This is nothing new. I mean, it has been actually worse if we look back over the past 20 years. Actually, what we could say is that as emerging economies have moved up the income curve after a spectacular decade of, say, 2000 to 2010, 2011, growth going forward, it's going to become harder to achieve. And packaging this group of countries under the label of emerging markets, it's becoming harder and harder. So right there you have countries with nominal rigidities, like Venezuela and Argentina, clearly on an unsustainable path, and something needs to be done there. But you have other countries that have used this period to add financial flexibility and allow markets to actually develop and create these self-equilibrating dynamics that we are seeing. The fact that currencies are depreciating, equity markets are going down, interest rates are going up, is actually not a bad thing. It is a good thing for the economies because you take volatility away from real variables, and these will help countries to address their external imbalances for those that have them, and in general have emerging countries in a better position to reaccelerate in terms of growth. Having said that, there are also countries that did not use the tailwind in the right manner and sort of change these external surpluses with an unsustainable credit boom and a deterioration of their competitiveness position. That wasn't clear as markets were behaving well. So countries like India, like Brazil, for example, are now being subject to the scrutiny of markets, being challenged, their macro position, and that's something that they themselves created. So those countries are different, and financial markets are differentiating this by having, for example, the Polish zloty has appreciated like 30% against the Turkish lira, something that in some other periods would have been unthinkable. No, things just move in tandem, but we're starting to see differentiation. Mexican rates have outperformed Turkish rates in the past couple of months by 150, 200 basis points. This is good also. Markets certainly reacting in a differentiated manner based on fundamentals.
But if we see the fundamentals, we're having a country that's going to grow 3.4%, according to Banxico, this year, and people keep praising what's been done last year, etc. And still, we're seeing the peso under pressure, losing 3.6%, year to date. The fourth worst performer among the 16 major currencies in the world. What's going on?
Well, there are several ways in which you can think of the peso. It moves with overall risky assets, equity markets and credit, and that has been the dominant factor right now. Now, against other countries that are being more challenged, actually the peso has behaved very well. So that tells you a lot about the structure of the economy and its overall position in their external accounts, in which Mexico, there's not an issue on dollar funding, tightening liquidity, and all those aspects that have made some investors think about the fundamentals of different countries. But we're in an interconnected world, and in that sense, this is risky assets that tend to move based on the cycle.
Risky assets, a global environment with a lot of parts moving nowadays. Fed tapering, and when I hear more about the Fed, this week, when I hear more about the central bank, Friday, in the first monetary policy of the year, Gustavo, to what extent the global uncertainty and the volatility, and add to that not only the situation in the emerging economies, but the biggest driving force in the last decade for the global economy, China, on the verge or facing a sizable slowdown. To what extent those factors will in some way diminish or reshape the political landscape in Mexico as far as going into secondary legislation and additional reforms?
Well, this adverse environment that we're seeing right now in terms of currency and investors sort of associating the Mexican peso along with other currencies that are perhaps more risky, at least initially, they're still reacting against the peso. This might have the negative consequence of not sort of giving the government enough time for these reforms to play out in a way. We see decreasing economic activity in China, or at least the signs are there at this point, which, as we know, Mexico would be less exposed compared to other countries like Brazil, who trade a lot more with China, particularly commodities. For better or worse, Mexico is a lot more connected with the US economy. And in the bad times, that's very bad, but in the good times, that's great. And right now, with strengthening US economy, I think the outlook for Mexico is considerably more positive than other Latin American countries, for example. But a key point, I think, is that these reforms that were passed this last year are still being worked out and being hammered out in secondary legislation. And I think it's important not to lose sight that, on the one hand, there's this very important opportunity to move things forward, but there's also the risk that because of these headwinds, that they may end up being watered down in the process of writing the secondary legislation, and also because of inflationary pressures, interest groups feeling perhaps squeezed in the pinch of the short-term considerations. So it really remains to be seen whether the country is able to weather this, what we hope would be a short-term storm, and really push forward and leverage these reforms that have been adopted.
You heard it here, correct? Now let me ask you this, and this is a question for the audience. Today we got a news that there is a fund manager who is pretty much creating a parallel between the reforms being carried out in Mexico and the reforms being carried out in Japan, like the policies of what we call Abenomics. And this is a question for you because later on, okay, I'm going to give you the name of that hedge fund and what he's saying about Mexico. But I want you just to keep that in track, put that thought, from Gustavo on hold about reforms, etc., and what will means for investors worldwide. But Lisa, let me just get back to you in Brazil. I think is a very catchy angle there from Gustavo. You also oversee Brazil in there. What is your current assessment between the two countries? If you can encapsulate that for us, as we're seeing, pressure in Brazil, and of course, all the fears about a downgrade.
Yep. We have, I think, Mexico is BBB plus, stable outlook. Brazil's one notch lower, BBB, with a negative outlook. And we put the negative outlook on the rating in June of last year, with a view that over the next several years, could be not necessarily before the election, could be after the election, we'd want to see how the tone of policy plays out. You've had some bit-by-bit deterioration in terms of the fiscal trajectory and questions about what that exact target is, with some weakening on external indicators amid a low growth environment. I mean, Mexico underperformed Brazil in terms of growth last year, closer to 1. Brazil's a little above 2, okay? Neither are stellar. They're at the low end in LATAM. And Brazil this year we would expect to be around a similar rate of growth, a little bit lower this year than last year, closer to 2 versus a little bit higher than 2 because of some tightening, et cetera, a variety of things. But I think that the message is we see policy having shifted somewhat to the other direction that may play out with a downgrade. But to step back, and it goes back to, I think, one, we'd expect volatility for all of EM at this moment. But if you look where the region stands today, it is still, putting Venezuela, Argentina aside, very low ratings. On average, 85% of the region's GDP is investment grade, and that includes Brazil. Even if we downgrade, the deterioration would likely be more in line with a BBB minus rating. Brazil, external indicators, weaker than they were, necessarily not taking as much advantage of the headwinds, the last kind of the good, the global environment the last couple of years. But external debt, still night and day relative to where it was a number of years ago. On the fiscal side, the trajectory is moving the wrong way, but the fiscal debt profile is still night and day where it was, a number of years ago. And those are points that keep in mind that need to be kept in mind. And the point that Gerardo highlighted in terms of the fluctuation in the exchange rate, that's part of an adjustment mechanism. Now, the real has weakened much more strongly than the peso the last year, so far this year, because of some of the other weaknesses. But that's also an adjustment mechanism that is important, and there's still resiliency there. And I think that's what I would like to highlight there. Again, some deterioration, but it's still much stronger than it was, a number of years ago.
Gerardo, I'm going to ask you this, but I'm asking really Lisa, okay? And I'm asking you because I know Lisa is not going to answer me. Is Brazil being downgraded this year?
Well, when I was a government official, I remember back in 2009, Mexico was being challenged in an important way because of a complex environment and the linkages against the U.S. economy. We were arguing back then that the financial flexibility and the policy reaction function by the government should be enough to address this very difficult period that the country needed to go through. Well, but that was not enough for Lisa back then, so she downgraded Mexico at the end of 2009. So she's tough, and I'm sure that she's going to apply the same sort of metrics with Brazil.
Okay. It's a group decision, tough group decision.
Where right now, Gustavo, and let me start with you this question, and it's going to be for Lisa and Gerardo as well. Where do you see the government, the president, investing his political capital, from the reminder of this nascent 2014? Is going to be secondary legislation? Is going to be in trying to reaccelerate the economy from a very dull, last year where the government was accused of not releasing, public spending enough in order just to put the wheel of the economy in motion? Is going to be secondary legislation? Where do you see Peña Nieto's political capital being deployed?
Well, again, given the international context in which we started the year, if you had asked me perhaps a month ago, I would have given a different response. I think the government, up until the end of last year, had sort of the opportunity to really push for secondary legislation to bring down these reforms that many of them are still at the level of just a framework and general guidelines and principles to follow, and really need to be hammered out. Today, we see these short-term considerations we've been discussing, but there's the issue of security, right? And even though the government, the federal government, I think for very good reasons, made these reforms a priority, this year, I think it'll be a lot harder once these reforms have been approved to ignore the issue of security, both in the public discourse and in terms of tweaking the strategy or really changing the strategy. And up to now, I think it has worked out to have a strategy of, okay, well, the security situation is separate. Let's put it aside. It dominated the media and headlines for the last 6 years, and there's a lot more to Mexico than drug violence and organized crime. But the two are related. Economic performance and violence and crime are related. And even though some countries like Colombia were still able to grow at relatively high rates in spite of violence over the course of decades, the important part to look at is the opportunity cost, sort of what that country could be growing in the absence of that violence.
And we're going to get back to that point. Lisa, political capital, President Peña Nieto, going forward, where do you see it?
Just to finish up on that point, that's exactly the word we use at S&P to highlight what the security challenges pose for Mexico. It's an opportunity cost. It's very hard to get a sense of how it has held back growth, but you have to think you would have more buoyant growth. And so I just wanted to echo that that's definitely the context that we see it in. I mean, this year, clearly the events on the security front will highlight this, and our view has been that the government security strategy would be some evolution, not a revolution from that of the previous governments. We're likely to have some more clarity on that this year. But we believe the political capital really was going to be focusing on as well the secondary legislation versus, I think the political capital that has been used to push the kind of energy reform that we've seen on paper through so far, the coordination at the end of last year. You think about how quickly the energy reform moved following off of the political reform, et cetera, and then including through the state legislatures was pretty impressive. And we believe a lot of the secondary legislation or key elements of it have been negotiated already, and say drafts are there. Now, that still doesn't underestimate the challenges of then passing them and getting them the
Right.
final, I's dotted, T's crossed, et cetera. But that's where we see the focus for the first part of this year.
When do you see that being completed, the process of this secondary legislation? We saw last week the president, the central bank governor, Agustin Carstens, saying in an interview with Excelsior that they're in that process, in that period. They have 60 days pretty much to submit the secondary legislation for the banking bill. And Gerardo, I wanted to also get your thought about this. When do you see this process being completed, round and ready to take off?
I think the number one thing is going to be on the energy side. I think that still takes the priority, because that is what there's going to be a much longer lead time trying to get kind of then deal with the changes and strengthenings and the different corporate format, for example, at Pemex and CFE. And so we believe that's going to be the first priority. And I think certainly our impression is that's going to be being tackled sooner rather than later in this first legislative session, first part of the year. I mean, the government ideally wanted by the end of the first quarter, so it put some space in there. Ideally, hopefully you see something in the first half of the year.
In the first half of the year. Do you agree, Gerardo? Do you know, for a person that knows the government inside out, and right now have a global view on Mexico, do you see that secondary legislation process being completed in the field half of the year?
So for as much as the spectacular first year of government that President Peña had in terms of dealing with the stuff that you can every 30, 40, 50 years in a country, the bad news is that the level of complexity of the tasks that need to be done soon are much higher than in the past. Certainly, look at the energy reform. You needed to change the constitution and allow for private investment. The level of technical complexity was not necessarily that high. The complexity was in counting votes, the ability to count votes and getting 2/3 majority. So on the technical side, as you move along the implementation, not only on that, but there's a lot of stuff to be processed on the telecom side, and a lot of stuff to be processed on the political reform side, and a lot of stuff to be processed on the financial reform side. So technically speaking, there's a lot of complexity that needs to be worked out and be presented in Congress and sort of pushed it through. The politics of that has been getting more complex as there's going to be change in leadership and the PRD soon. The PAN, same thing, and it looks like it's imploding, and it's going to be difficult to get traction as we have seen so far with the political parties. And thinking beyond that, there is no country in the world that has become rich or has continued to move up the income curve without addressing the quality of institutions and the ability to do business. And what I mean by that is transparency, corruption, rule of law. We haven't seen any of that yet. And Mexico has had significant growth, much faster in history than the BRICS and all those. So it is at a point in which, in order to continue, certainly you need to unlock sectors, but you need to address the institutional quality, and there's nothing right there in the horizon in the agenda. On banking and finance reform, the only comment I would have is that, there were a bunch of things there which are good, but the most important aspects of the reform probably were the ones that got least visibility, which is the prudential aspect of that, Basel III, the banking resolution bill, and that chapter that had yet to be written in a, say, 10-year history of reforming the financial system in Mexico. That's certainly, I think, the most important aspect of the bill. And the other one was an important reform to the concurso mercantil, to the Chapter 11 law based on the negative experiences that the country has had in processing the first few or the first number of cases with the new law that was approved in 2000. So there are some additional elements that need to be presented, but those are the ones that, I mean, having an Agustin Carstens at the Central Bank and having Luis Videgaray and having the Hacienda Banjico team, those are the ones that we should be least concerned on. I mean, these guys know the stuff and they're gonna get it right.
So if I read you well, are you sort of like a cautiously optimistic on the outlook for this secondary, regulation discussion sector, given the fact that you're putting a lot of pressure on the Mexican system to reshape itself?
So it was amazing the amount of things that were able to be processed in Congress last year, which was great for the country. Now, if you have started on that, you better do it right, because you can get it wrong, and that would be very, very bad.
Gustavo, you are the expert studying government policies and how they translate into growth and development, etc., in countries such as Mexico. What are the odds that we're going to see a successful passage of secondary legislation, this year? Federal health, as Lisa, hopefully is expecting, or not?
Well, I think we will see the passage of some secondary legislation. The question is, well, what kind of legislation we will see? I think the government has the votes to pass some form of legislation. I think I'd like to comment on a point that Gerardo made, I think, regarding institutions. And this is important because reforms in Mexico, we've had quite a few in the last 30, 40 years, some of them that were pretty fundamental. And the devil is in the details. Right? So how these secondary reforms play out, I believe, is still a key component that will determine the path that we follow. And if, Gerardo mentioned that things could go wrong if you don't do it right, and it's very true. In a way, I understand these reforms as a window of opportunity that is opening, but that does not guarantee a path forward. And if I could use this analogy with NAFTA again, back then expectations were really high. Reforms were extremely ambitious. And at the time, there was I think there was a lot of political will, political capital, a great technical team behind them as well. And certain aspects worked out. Trade increased dramatically. But others didn't necessarily. So today we have, sort of one of the things that is giving Mexico, again, part of this Mexican moment, is the fact that wages in the country are now lower compared to those in China. So, sort of decades after NAFTA was first signed, Mexico's wages remain roughly at the same level in real terms. So again, it's something that should give us pause in terms of where these reforms might take us. So I would definitely emphasize the cautiously in the optimistic.
Given that secondary legislation discussions that we're seeing here from Gerardo and Gustavo, was your move and Standard & Poor's move premature by upgrading Mexico in December rather than waiting for the completion of the process, by mid of this year? How do you feel about that?
We don't think so. I mean, that's where, one, in terms of market volatility, clearly we have long said, that during the tapering process, you're going to see periods and bouts of volatility, and that's going to have an impact on, the asset class. Some are better able to withstand that than others. And we put Mexico certainly in that camp. And our view was we could have waited, sure, but given what we saw in terms of the messaging in looking at the transitory articles, for example, highlighting the menu of contracts available that were put on the table as the energy reform iterated during the fall, we felt comfortable with the strong signaling that we see. Now, when it comes down to it, you have to, the secondary legislation is key. And then it's not just the broad secondary legislation, but what will be the type of contract chosen for a particular field. And that determination will come from CNR/CNH, Hacienda, some mixture of it. So that goes back to broad institutions, for sure. So there is still a lot of implementation and execution that's needed, but we believe the signaling was strong enough that made us comfortable with an upgrade.
I'm gonna just go to Gerardo again, asking Gerardo this time, and then get back to you on this, Lisa. Do we have in Mexico right now enough ammunition so that the country will weather the storm? Whether this storm is a temporary one, something that we saw in summer, you remember after Bernanke announcing on May 22nd, hey guys, we're going to consider tapering here, and that created a wave of losses across the board in the emerging markets. We have Mexico with essentially 95% more international reserve, since 2010 through this point, Gerardo. Is that going to be enough?
Well, I think that Mexico has significantly more ammunition than it needs to withstand the current environment. But we need to understand ammunition from a different angle. It is not reserves, and it is not the capacity of government to sort of stop depreciating currency because of global dynamics. There's not reserves that could be enough in the world to do that. Mexico has ammunition because it has prepared and it has learned from past experiences. How can you say that? Well, look at the external accounts of Mexico, relatively well in order, but same thing on the fiscal side and on inflation. There has been a significant amount of political capital and human resources working on the financial stability environment that Mexico has created over the past 15 years or so. It has the level of knowledge and the political will to align macroeconomic policy tools to enhance and to increase the absorption capacity of whatever dynamics, be that inflow or outflow type of dynamics. But most importantly, it has one of the most flexible financial markets that you can find in the emerging world. So you combine all these together, and then you get these self-equilibrating dynamics in which relative prices change, and then people make decisions at those new prices, and that gives you an environment in which the real economy is actually well positioned to withstand the current environment.
Do you agree, Lisa?
Completely, and I think that you can't just look at what is the level of international reserves and they're X% higher. Within the narrow focus of international reserves,
Yeah.
I think, example, Mexico's at what, 176 billion? Brazil's are 370 plus billion, okay? You have to then look at how does that compare with the external debts coming due, or stock, with the flows, et cetera. And on a narrow, again, this very narrow number, Brazil's, despite the deterioration that we see in terms of the external debt and the financing needs, Brazil looks better, marginally, somewhat, than Mexico's numbers, the way we calculate them. But you put that in the bigger picture context. And it's not that one number ratio that, for example, determines the rating. It's the political framework and signaling. And here we have consistent policy signaling, a track record here on FX intervention or not, kind of so to speak. Very consistent signaling over a number of years. The economic resiliency, the fiscal picture, plus the external and the monetary policy signaling, et cetera, is this whole picture that comes together. That is what determines the ability to manage or not the pressures coming from the capital flow side.
And we have also the country with the flexible credit line for the IMF,
Exactly.
Which is 70
Plus
billion
billion,
something
73,
dollars in there. And what's your call on the peso, Gerardo? And this is like the tale that Juanito and the beans, correct? And so I'm going to insist, we're getting this quote from Gerardo tonight. Say, so should we say, are we going to see the peso as most of our economists that we surveyed in Bloomberg, 41 of them are seeing the currency, navigating this rough moment right now and ending 2014 at 1260, and even more, rosy outlook for next year, seeing the currency at 12.25. What's your call?
If you look at the peso, you can do a pretty long list of reasons why it should be stronger going forward, and especially those related to country differentiation and reform, momentum, dynamics, and potential new investment opportunities. Now, the peso is a reflection of Mexico relative to the world. So it's going to be very much a play on how the world is over the next year or so, to be able to tell exactly what we could expect. On the domestic side, it will also be a function on this implementation process, and actually the capacity of investors to express a positive view and channel those investments in specific investment opportunities that will actually make the currency move. Unfortunately, in Mexico, we don't have a well-functioning equity markets. Equity market in Mexico is a representation of the economy. A lot of concentration of interest, not much liquidity, dominated by a few players. And that has to change over time as part of the reform agenda. If you want to invest in the banking sector of Mexico, well, guess what? There's no way to do that in an efficient way, just a couple names there. You want to invest in the energy sector, very promising. Well, guess what? You cannot do that through the stock market. So Mexico is experiencing limitations to process all these interest from people from overseas to actually put their money to work. The local bond market works very well, but you get exposed to interest rates. You want to get exposed to economic growth, and there are not necessarily enough vehicles to do that. So that is what makes a call on the peso a bit hard. I'm sure that if we had asked this same question 6 months ago, everyone would have said that the peso would be much stronger than the 13.37 that it is today.
Gustavo, if I go to you and ask you, what will be the next set of reforms that you see the administration pushing forward, besides the secondary legislation, would you see, or do you see a scenario where we're going to see health care reform, the universal coverage in Mexico, tackling the protective issue of the pension fund system in there, plus an agrarian reform? Those two reforms, do you see them in the pipeline, and if so, how soon?
I think it is likely that those reforms will be passed in 2014. The government has outlined them and sort of announced them in 2013. And so at this point, we have just a general idea of what these reforms are. So there aren't details. I haven't seen real details as to what they would mean. But one thing that is worth considering in terms of this healthcare reform, for instance, is there's a lot of talk about sort of providing truly universal health care for people in Mexico. And I haven't seen a discussion yet as to how that healthcare provision would be paid for. And this reminds me of the discussion that took place in the context of tax reform, where the revenue side was somehow linked, I'm not going to say earmarked, but at least associated with how it would be spent, and sort of the idea of employment, unemployment insurance, and universal pensions and so on. And again, I think the government perhaps needs to do either a better job at communicating how the revenue side is going to be linked with these expenditures on the social provision, or really needs to do a better job at figuring out what needs to give in order to compensate for these new expenditures. So it worries me a little bit that there's more spending on the table, at least in the horizon, that the fiscal reform has the promise of increasing fiscal revenue. There are different figures on the table, but sort of maybe 0.5 percentage point as a share of GDP in 2014, all the way up to maybe a couple more percentage points as a percentage of GDP by 2018. But this is still a promise, right? And if we look at the history of fiscal reform in Mexico, things haven't been too rosy. So the last several reforms, 2007, 2009 fiscal reforms, in sort of the objectives were the same. Let's increase the share of revenue as a total GDP, the revenue as a total share of GDP, and it has been extremely hard. So if we look at the fiscal intake in Mexico for over the last 20, 30 years, it has remained roughly flat. And now with the changes that we have in terms of energy reform, I think there's a lot of uncertainty as to whether the holes that might be created in the context of Pemex can be compensated with non-oil fiscal revenue. And if we're talking about spending on the social policy, I think there needs to be a discussion as to where this money is going to come from.
Lisa, you wanted to add something in there? Gerardo, we're seeing this situation about the fiscal reform. The previous one was passed by President Felipe Calderon, and at that time it wasn't called a reform. It was simply, sort of like a watered-down reform. You were a protagonist of that reform back in the days. What do you make of what Gustavo is saying, the track record of Mexico not being that stellar when it comes to implementing this thing?
Fiscal reform is never rosy and it's never easy. Not in Mexico, not anywhere. You do fiscal reform when you're forced to. You don't do that by design or by having a better structure. It is what it is, and then the sort of the economic structure and the potential GDP growth, you need to address that because it's going to be helpful on the fiscal side. And you're not starting from a blank sheet of paper to design your overall fiscal framework, which, by the way, has been improving significantly over the years with the introduction of value-added taxes, and then at some point taxes on assets, and then the YETU, and now consolidating in the income taxes. The inertia on spending in Mexico and pretty much everywhere is for higher spending, and you need to address that as well. There may be some good opportunities down the road to address the issue and to redirect spending and improve the quality of government spending, certainly, and that needs to be part of the overall fiscal discussion as well.
Lisa?
Yeah, exactly the point that Gustavo highlighted in terms of looking at the challenges of past reforms actually then coming to fruition and generating a higher revenue base is something that we've consistently highlighted. And if you look at Mexico's overall revenue base of, say, for the general government, 19% or so of GDP, that compares with 30% of GDP for its peers. Similar rating, similar level of per capita GDP, et cetera. For us, for example, the upgrade was reflecting combination of the fiscal and the energy, because we think that the energy has a key role in transforming the potential for growth, and with fiscal revenue implications of a less volatile revenue base on the oil side. But there were steps taken on the tax side, and on touching on some of the points that Gerardo highlighted, structure of the fiscal focus in terms of the targeting a broader deficit, trying, again, execution and follow through something will be key, but trying to put some limits on the pace of growth of discretionary spending to kind of give, to try and save more, for example, revenues, oil revenues in particular, in an up cycle. And these points, I think, will be important to follow through and see how they are executed upon. And I think the government, the Peña Nieto administration, has a focus on delivering on the social side and finding revenues to attend to those social needs. It's not that the plan is, let's run the level of debt consistently lower and lower and lower. Hold it steady, maybe somewhat decline, maybe up a little bit the next couple of years perhaps, but it's not that it's a dramatic reduction in debt that the government walked in with. That's not their policy focus, but it's to attend to social needs and to find revenues to do that within a broad fiscally responsible framework. And hence I think the example of trying to rein in the pace of growth of discretionary spending over time, and is signaling how the deficit, while it's higher this year, should move lower over the next several years. But these are the things clearly that the markets will continue to focus on.
Let's declare a little water break here, and let me ask you a question. How many of here knows Lawrence Fink from Blackrock? Rings a bell? Okay, here we have. Bill Gross from PIMCO? Yes. Are we familiar with Bill? Pretty much, we know he's a runner, etc., correct? No. Now, this is the name for you, a new name for you, Rob Citrone. Yes. Do you know Rob? You see, but Susan is taking advantage of it because Susan has been, long enough in the financial industry to know Rob. But this is an answer for the question that I raised earlier to you guys. A name or a new investor raising and praising what's going on in Mexico. Rob Citrone is the founder and CEO of Discovery Capital Management. Is a $15 billion macroeconomic hedge fund based in Connecticut, uptown here. And today we got a story out in Bloomberg saying, quoting a letter that he sent to his investors saying, Mexico, watch out with this, Gerardo, and I know that you're gonna love this. Mexico is our highest conviction long idea for 2014. And he's joining, Bill and Lawrence Fink praising what's going on in Mexico. And he goes a little bit, in that letter saying, on a global basis, Mexico's reforms agenda even exceeds Japan in our own view. Do you buy that? Lisa?
I think going back to our rating action at the end of last year, we felt that you had some combination of key transformative events that come together that better, we believe with time will add greater resiliency to the Mexican economy, to the fiscal accounts.
And do you see what's going on right now in Mexico? Any point that we can compare globally nowadays? Any other country that it comes to your mind to say, hey, yes, if we wanted to establish a parallel between this will be the other country?
You don't see in emerging markets the same kind of momentum that you've seen, I would say, in terms of reform push over the past year. It's hard to find another emerging market with that. Now you have emerging markets with higher ratings because of different starting points, but it kind of the kind of coming in the door with be it a labor reform passed with the previous administration, an education reform that will take many years, in our opinion, to come to fruition. That's not something we highlighted, but it's a positive reform when depending on how it's implemented. Then you go through financial sector reform. You put them all together, and there's significant potential there, but it also rests on execution. And embedding them in the institutional process.
In the institutional process in there. Gerardo, what do you make about Citrone's comments and then say, hey, this is our best idea, our best conviction, long conviction for 2014. And I'm bringing this to Gerardo because, just not long ago, he was coming to New York to sell Mexican bonds, pretty much to promote Mexico among investors and saying, hey, guys, I think that we have a story here that you want to hear.
So I haven't been to Mexico on business in the past year since I got here, and I was there a few days ago. And it struck me that there is a generalized negative sentiment there of what's going on. So the finance minister was asking me, what's my take on that and how we're seeing things. And I was telling him that very fast, the perception gap outside and inside of Mexico is going to close very fast as the cyclical recovery becomes clear to everyone. Mexico is going to grow this year above 3%. Some people estimate even close to 4%. We'll see significantly higher in any case than what we saw last year. And this positive perception overseas is not because Mexico in the EM world is having some reform momentum. But when you think about in the world, what governments are doing things that are the right thing to do for their countries, their economies, medium term, even though it has significant political cost, sort of headline type of cost in the short term, there are not many countries, actually. There are not many countries. Japan, certainly one of them, Mexico, another one. These type of changes are done mostly in periods in which you basically have no choice, which is in a crisis. So having in a relatively peace period, the government doing this, I think you don't see that in many places. And one place, by the way, that you're seeing similar type of behavior is in China. The government is looking inside and saying, whoa, I have a problem. If I continue growing at this pace, not now, but in 5-6 years' time, I'm gonna hit that middle income trap. And with the ability to do business that you have now in China, they're not gonna get beyond that level. So you better start changing things and rethinking on how. So doing that in a period of peace is significant.
Gustavo, your take on that, can you establish for us this parallel, this global parallel, if you may, between Mexico now and any other country worldwide? What's your take on that?
I think again there's a potential for growth in the medium to long run, and if the reforms come to fruition, if they really are implemented the right way. In the short run, at least sort of this year, I am somewhat less optimistic in terms of the forecasts that are being presented. So last year, in 2013, for instance, the U.S. economy was picking up. Central banks were still sort of quantitative easing was still in its full force. And the forecast was much higher for Mexico. It started being adjusted, and there was already sort of, in a way, a Mexico moment. So, The Economist, for instance, back in the summer in 2013, was already talking about Mexico as the next best thing. And it seemed like the stories for Mexico and Brazil had crossed paths early in 2013. They inverted. Before Brazil was great and Lula was amazing and Mexico was down in the dumps because of crime and so on. And now it's the opposite in the beginning of 2013. There's a Mexico moment. There's already the sense that reforms are happening. So we see, as Lisa mentioned, even towards the end of the Calderon administration, we see a labor reform, meaningful labor reform that is passed. And we see education reform, and this momentum starts building up. Yeah. There's the Pact for Mexico, right? Sort of this minimum agreement or consensus among parties to push some of these reforms forward. And we still don't see the growth that was expected. So I am somewhat less optimistic in the Mexican case, particularly facing these headwinds early in the year and inflationary pressures, and the central bank might find itself in a tight spot in Mexico. Yeah. Sort of pursuing the finance minister, pursuing some counter-cyclical measures, and at the same time inflation going above 4%, sort of beyond the 2 to 4% range that the central bank has set. So I'm not so sure. But let me give you just one very concrete example as to the importance of secondary legislation being done right, and that is energy reform. So Pemex has been fundamental for Mexico's finances for many, many years now. Right. And the government right now relies on Pemex for over 30% of its revenue. Now, I think the important part of the reform, energy reform, is that it opened the menu of options for the private sector. Right, so you have all of these different tools now that are available. You're bringing in competition. You're not just opening Pemex to foreign investment. You are creating a market for competition in which Pemex is one actor, and you have the potential to strengthen Pemex and unleash the growth that would come with the energy sector. But there are also important pitfalls, right? So let's say that we take profit sharing agreements as one of the tools that has been opened up
Yeah.
in energy reform. These agreements are tricky, and we should not forget about the asymmetry that characterizes the relationship between private companies, private energy companies, and governments across the world, not just in Mexico. And this asymmetry is true regardless of the level of development, but it accentuates in the developing world, in which state capacity is weak. So if these profit-sharing agreements are not done right, there you have a huge risk of the government not being able to rein in these companies. And you have historical precedents. There are many countries that have gotten involved in very serious arbitration against against these companies, and that's one of the risks. So just to highlight the importance of how things can still go very, very well or not so well.
And you bring a point that it reminds me, Gerardo and Lisa, you remember back in 2008 when President Calderon managed to pass, the first energy reform during his presidency. There was a figure that's called the bonos ciudadanos, the citizen bonds. I've never seen them. Back in reality, it was a promise that was written in there. How come? Is that, what is your take in this, Gerardo? And it will raise a question mark about something that was even written, but it never came into fulfillment?
So the biggest problem of the energy sector in Mexico has been Pemex over the years. And it happens that Pemex is the only player, has been the only player in the hydrocarbons sector. So there is no way to plan for a successful energy policy based on Pemex. So that energy reform, given all the political constraints that it had in its own design, had to basically work with Pemex and reform Pemex. Unfortunately, I don't think that Pemex is, in a reasonable time horizon, is a reformable company, one that you can bring up to private standards. So what the government did basically is to get around that problem, to get around Pemex. Pemex is a group of problems that you need to address, starting from the pension scheme. That's the most expensive pension scheme of the country, unaddressed, is in Pemex. So you open up other avenues that will allow you to exploit an energy reservoir that experts say is comparable to a Middle Eastern country. And it has been unexploitable because you have Pemex. And it is not Pemex to blame. There is no energy company in the world with a more complex mandate like Pemex, because you gotta do upstream and downstream, and then you gotta do transportation. And guess what? You operate also the gas stations everywhere in the country. So it becomes unmanageable, and unmanageable completely. So the right thing to do it is to basically get around it. Why did bonos ciudadanos do not exist? Well, it sounded very well, very nice. I mean, I remember discussions we were having back then. You know what? Democratize Pemex, and then do a citizen bond assembly. All holders in the Aztec Stadium, 110,000 people, and have the union sitting there with management explaining the results. It will all sort of rearrange the incentive scheme in a way that the company will become more efficient. That's actually not possible, I think, honestly. So the way to go is basically to get around that, and the issues that you have to deal with, you deal with them. On the fiscal side, there's no cost to that, because the tax take, the base tax take, that's going to remain constant. And if anything, the potential is huge, because you will develop more investment opportunities that will become tax revenues down the road.
Lisa, you wanted to add something to that?
The key thing between, say, the energy reform that we've just had and previous energy reform is you've touched the Constitution in a meaningful way. And you've opened up this menu of options, which with the private sector can compete with and work with Pemex. And I think that's an important element in terms of the production sharing contracts. which is a menu item on the table. Again, everything needs to be fleshed out. It depends on the field, et cetera. But Pemex is still knows the topography, the geology, the best of anyone else in Mexico. Rather, globally, because the private sector externally hasn't been in the way they have. And so what you could have is the pairing up and risk sharing that hasn't been able to happen previously. I think that's where you can get greater potential. What we see, talking with the experts who are the energy experts, et cetera, greater potential, again, from this energy reform down the line.
Gustavo, and we have 10 minutes left in here. I'm going to just try to just squeeze as much as I can from you guys. Violence, you said violence is an issue, is an opportunity cost there for Mexico. Tomorrow, President Peña Nieto will most likely announce the creation of a kidnapping unit, and is going to name a head of that unit in order to address, a rising kidnapping numbers in the country, which contrasts what the government has been saying. The government has been saying, hey, this type of crime has been declining. But we have voices from the civil society saying no, that is not the case. Are you hopeful that these type of changes will in some way help to reshape the government's policy so far against organized crime?
So I think that there has been a continuation, generally, not exactly along the same lines of the previous administration's policies in fighting drug trafficking organizations and organized crime, but by and large, it has been sort of the same strategy. And there has been talk about creating sort of a gendarmerie to sort of as an intermediate, more sort of military style, but still sort of civilian police, and following the example of Colombia that has sort of a national police that has, a single chain of command. Police forces have come and gone. They create new corporations, they change the name, they centralize them, they decentralize them in Mexico for the longest time. I think that there really needs to be a change in the approach. And I think there is strong evidence that shows that the militarization of anti-drug efforts in the country, in the states where these military operations have been concentrated, those were states that had higher levels of violence to begin with, but that once the military comes in, that violence increases, and that compared to states where there isn't a militarization, and that other forms of, let's say, other indicators of crime, not just homicide rates, but then kidnappings and other things that are less associated with the direct confrontation of the military or the armed forces, the federal forces with drug trafficking organizations, also go up. So again, kidnappings and other forms of crime. And this is problematic. There needs to be strong institution building and judiciary and at the local level. And of course, this is hard if you don't have anything to replace these forces with. So there's no easy solution to this. But there's, I think, a general sense that public safety is the number one priority for people. If you ask people, a survey after survey says today that public safety is their main concern. And I think this will probably occupy the government for the most part of this year, particularly in the context of these sort of vigilante groups that are emerging and that are becoming
in Michoacán,
more salient.
Do you think that will be a case that will express to other states, having civilians taking arms, being trying to defend themselves against what is overpowering, crime situation in states like Michoacán or bordering states?
It's hard to say. Michoacán's situation is not unique to Michoacán. So there are other places where you see similar levels of violence and similar grievances. So it's very conceivable. But I think what will play an important role in determining whether this spreads to other places will be the government's reaction with respect to these vigilante groups. Or how do you deal with this? And if the government is permissive, this might encourage other groups to do the same elsewhere. So that remains to be seen.
Gerardo, can the Mexico economy and the Mexican markets surprise us in a positive way this year? We saw a record year in terms of IPOs, bond sales last year, and we're seeing a very active markets if you compare back in 2009, only 4 years ago. And the president of the stock exchange, Mr. Luis Telles, a former energy minister, a former transportation minister, say that Mexico lived last year a historic year in terms, of activity at the stock exchange, bonds, and shares. What do you see happening this year, and what are you telling your clients that when they go to you and to ask for a word of wisdom on Mexico?
So Mexico has had a good year in terms of IPO issuance recently, just because the base was super low. There were no sort of real estate, no private equity type of schemes, and on public companies, basically the pipeline has been dry. You look at the balance of payments of Mexico, foreign inflows to the stock market have been zero, but for the past 10 years, not now. I mean, you add up everything. There's no interest in Mexican equity market just because it is not a good vehicle to express a view with size, with liquidity. The relationship, say, of growth and opportunities is not necessarily linked with the stock market. So for sure, it's going to be a good year. There's already a pipeline there. Again, real estate, trust, and a few more companies that have had the scale for a while to become public. The playing field, however, is not going to evolve to the extent that the governance structure and the market structure is not changed. And again, that's a representation for the most part of the economy as a whole. So I see that, I mean, there's not that much scope for surprises in the short term, but rather sort of as the investment opportunities evolve in the next few years by opening up these new sectors, hopefully we're going to have a stock market that actually works and is comparable to other countries in which they have a similar GDP per capita.
You oversee emerging markets, in Blackrock. What is your call? What are you saying, or what are you sharing with your investors when they come to you and say, I want to invest in an emerging economy for whatever reason? Is Mexico your top pick, or do you have something else?
Well, investing in emerging markets is not easy. As I say, emerging markets means volatility. Equity markets have 25% volatility. Developed equity markets have 15% volatility. There's a portfolio manager that says that human nature is not designed for volatilities beyond 15%, because when you get the drawdown in a year of 20%, which happens with a significant probability, people start getting nervous. So you got to be cognizant of that. People, what they do is try to time the market. Is it a good entry or not? And rather, the question that we should be asking, or they themselves should be asking as investors, is time in the market. How much time you are willing to stay invested in order to reap the benefits of this overall macro story, which is consensus that growth is going to come from emerging markets, 80% of the population, 50% of GDP, but only 19% of world financial assets. So where else is the growth and the returns going to come from in your portfolio? It has to be emerging markets. Now, in order to do that, you got to stay invested through the cycle.
And invested for how long?
Well, through the cycle, 3 to 5 years, and you're going to get double-digit returns.
All right, Lisa, back to you again. Your statement on December, a month ago. You kept the outlook for Mexico stable.
Yep.
What do you need to see in Mexico to improve the outlook, to make it positive, or make it in a more general way? What would you like to see, coming as a main decision from Mexico in the next 12 or 18 months?
I think to underscore why we have a stable outlook is we recognize this significant reform, momentum culminating with this landmark energy reform with some fiscal measures, but we recognize the challenges of implementation and the lead time that's going to be required to have this reform actually follow through with an important uptick, be it in growth and stronger resiliency in the fiscal accounts. So because of the time to do the secondary legislation, implementation, et cetera, et cetera. If we're surprised on that, I think that's something where you start to see Mexico reaping the rewards of this much sooner than we expect. That's an example of where we could have more positive upward momentum on the rating.
Would you like to see, the fiscal oil stabilization fund being created, started to run properly, that type of measures in that short term?
Like on that, to get the oil stabilization fund really going, first you're going to need the production flowing. So that's going to take quite a bit of time. And then, that's not necessarily the one I would point to. But if you started to really see the secondary legislation and going faster perhaps than Gustavo's thinking, and then the bid rounds going in faster yet even, to actually see some of that, the actual momentum kicking in that's sort of trickling more broadly in growth, or some of the other reforms that have put in place translating in some very hard to measure manner. That's the kind of thing. I wouldn't necessarily, for example, put it on the sovereign wealth fund, because that you need the actual oil producing. I think we could be surprised on animal spirits momentum. We're not necessarily expecting the money's coming in FDI related to the oil, but if you get broader investment sentiment coming in because of the positive effects associated with it, you could just start to see some benefits sooner rather than later.
In 30 seconds, each of you, we are having this window. Imagine that this room is 2014, right? What do you see there? What can you tell us about that future today? What is the opportunity that Mexico has here, January 27, 2014, 30 seconds?
So which future, which time horizon are you talking about?
Let's say the next 12 months.
I think that the government showed that reforms, and a very important number of reforms, very meaningful reforms were adopted, that political parties in Congress could come together and work on these reforms, and Lisa alluded to sort of this important message that was sent. We hadn't seen this in a while in Mexico. And I think the government has the ability to capitalize on that for the next 12 months. I think that in the next 12 months, we're still dealing with, the being at maybe the wrong part of the cycle right now, and these international pressures playing out. So I'm not sure that the benefit of these reforms we will appreciate this year. I think we need to look forward, maybe 3, 4, 5 years, and depending on the reform, but pretty much on any of these aspects. I think we need more time.
Very inertial. 2014 is going to be very inertial from an economic standpoint. Mexico is going to grow at its potential, 3.5%, no more than that. There are no reasons for that to be faster. The cyclical dynamics that affected the country last year are going to operate in its favor now. The intensity of trade that goes with the recovery in developed markets, it's certainly going to be helpful, but the environment, the business environment in Mexico is going to continue to be depressed these years because there's more secondary regulation to be drafted, and people get uncomfortable with that. So I see this year by being very, very inertial in many respects.
Do you agree with Lisa, for example, when she said that we're living a transformational moment in Mexico? Are you on board with that view?
Absolutely.
You are?
Absolutely.
Lisa?
I think the key thing this year is execution and delivery of what has already been, passed. And I think maybe messaging. I mean, energy reform passed, key execution delivery on that needed, but broader messaging to the population of why this is good for you. The financial markets know it, the economists know it, but energy reform is still not so popular domestically more broadly. Maybe messaging on that is something that we might would see more of this year.
Well, in that note, I want to just thank you all guys for being here tonight. Gustavo, Gerardo, Lisa, it was great having you. Thank you. Round of applause for you guys.